Good morning and welcome to the weekly roundup for the week ending Friday the 11th of September. We hope that you're enjoying these weekly updates, and please don't forget to subscribe to receive regular stock market content, and feel free to ask any questions in the comments box below. We would love to hear from you. We're also welcome you to follow our market sector reports on tech stocks, banking and even IPOs using the description below. So it's been so much to talk about this week. There's been a lot of action. The central themes for the week, without doubt, towards the end of the week, it's been Brexit. It's just been huge. The chaos that seems to be unfolding. We've also, at the beginning of the week, we had concerns about the AstraZeneca vaccine, and bubbling along behind all this, we've also got the concerns about the US tech stock sell-off. So diving straight in there with Brexit, the EU are basically threatening legal action against the UK and threatening to pull out of trade talks. There'll be no trade deal if the UK does not scrap plans to undermine the Brexit divorce treaty through its internal markets bill. So far the UK is remaining defiant. It's not intending to follow the EU's instructions, which basically means that Brexit trade talks are on the brink of collapse. There is a deadline in place, so by the end of September the UK government has to do this, and as I said, it is looking very unlikely at the moment. Now this is being reflected massively in sterling. The pound has sold off heavily across this week. It's trading down, it's slumped through 130, it's trading around 128 at the moment. It's lost around 3.5% across this week so far, the biggest sell-off in sterling since early March, in fact. And sticking with currencies just briefly, the euro is actually strengthening after the ECB meeting this week. The ECB economic projections were better than expected. Also, they didn't talk down the euro as much as we were expecting. So actually that softer tone towards the euro, because Philip Lane, chief economist from the ECB, had raised concerns that the ECB could be a little bit unnerved by the strength of the euro, but that didn't necessarily come across so strongly in the ECB meeting yesterday. So as I said, the euro is pushing higher. So as far as equities are concerned, the weaker pound is boosting the FTSE. FTSE's gained around 3.8% across the week. The weaker pound is obviously beneficial for those multinationals on the UK index. DAX has also pushed higher. It's around 2.6% up across the week, slightly less than the FTSE. Obviously, that stronger euro is actually dragging on the German DAX. Obviously, think about exports being a main part of the German DAX and the German economy. So that's something that's just keeping the DAX slightly lagging the FTSE. Over in the US, it's been a very different story. We've got losses across the board. The Dow's looking to trade around 2 points. It's going to end the week around 2% lower. S&P around 2.5% lower. Nasdaq also on for another sell-off this week. It's trading around 3.5% lower. That's adding to 3.5% losses last week. So it's not been a good start for the Nasdaq in September. Now this is sort of, the big question has been whether the sell-off in US tech stocks is just a natural correction or something more sinister, and it appears to be going for that natural correction stage at the moment, but it is still really too early to tell. Tesla, that's a stock that sold off 20% on Monday. So that's a massive sell-off, losing around a fifth of its value after it wasn't included in the S&P index. Now expectations had been that it would be, given that it had 4 consecutive quarters of profitability. The S&P committee that decides or takes the decision didn't explain the reason why, but the problem had been that it had been priced in that Tesla was going to be included in the S&P 500. So the fact that, and it would receive flows from passive funds, so the fact that it hasn't been included has seen a repositioning and a revaluing of the share price. Other stocks that have been in focus this week, the airlines. We've got EasyJet down 10%, British Airways, the week that Willie Walsh left, down around 12%. what we're seeing here is there's a concern over capacity. It's not picking up, flights are not picking up in the way that we were hoping, or especially the companies were hoping to see. And because of that, the rebound has just not been as what we're expecting. Capacity is going to be a lot lower going forward, and that's basically because the government here in the UK particularly keeps putting restrictions on travel. We've got sort of countries being added to the blacklist on a weekly basis, and also fears we've got rising of a second wave as well, are also just adding in there. So not a good week for airlines. Morrison's also reported this week. Now Morrison's they traded down around 4% across the week. Now we think supermarkets have really been sort of, quite a central focus as far as coronavirus and lockdown is concerned. But actually, surprisingly, although sales have improved, were very strong in the first half, costs have risen extensively as well. And so that's actually meant that there's been a pre-tax drop of around 28% the first half. That's pretty huge. Thanks very much for watching, and please do remember to sign up for those reports, and have a great weekend.